floor of the CME Group on Tuesday, May 10th. Top-notch trading to come in here and saying hi to everybody and thanking NinjaTrader once again with MrTopStep for that webinar that we did on Saturday. I hope that all that got in enjoyed the presentation and you were surprised to see me clean shaven. Well, that's because my kids won a baseball game and I promised them if they'd win, I'd keep clean shaven. So guess what? They lost last night, so I'm not shaving until they win again. Anyway, to cut to the chase. You know, these markets are throwing some curveballs, but overall since last week when we had that spike up in both the NASDAQ and the S&P made contract highs, well, the regular session never saw those levels. We made a contract high of 72.70 in the SPOO, a regular session high of 67, and we made a regular session high of 24.15 in the NASDAQ with a contract high of 24.2775. Those contract highs, Top Notch believes are key targets right now. We did see a flush last week from that 67 high in the S&P, and guess what? Anything under 29.5 was telling me to buy them as long as there was a settle above it. And as long as this S&P stays above that 29.5, which key that reverse head and shoulders, we should take a run. Those are key targets, but right now Top Notch is saying, look for 54.70 this morning. We're gonna nail that future. First time asking on the short side. But don't hold on too long, guys. We are fighting the trend, okay? The trend currency today is looking for a bias to the buy side. So with that in mind, other objectives are 59.80 and 63.10 for today, and then we'll see what happens. Stay away from the bonds. The bonds are a terrible trade. The last 2 days, right now they only have an 8-tick range in the regular session for over 2 hours. They're mainstreaming, which means they're flip-flopping action. They're consolidating a lot in this 24.01 to 24.15 area. So something's going to give, and maybe the 3-year note auction at noon will be the right tonic. With that in mind, you have a good day, and Top Notch will be back next week.